Welcome to another edition of Cattle Chatter. I'm Susan Littlefield with the American Ag Network. On the road, we've been at Husker Harvest Days, and what a better place to talk cattle with cattle behind us. Of course, neat thing about Husker Harvest Days, real quick for folks who haven't attended, is largest in the nation outdoor fully irrigated farm show. But more importantly, they see the importance of what the cattle industry is, and they've actually expanded the livestock sector. So if you can't make it, obviously this year, you're going to have to come check it out next year. No surprise too, this market has been on the craziest roller coaster that we've seen in a while. You step away from the camera or and the screen for 2 seconds and everything changes. Brad Kooima is joining us. Of course, he is with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about that. I kind of wanted to first kick off on the Thursday trade. It didn't open the best, but it didn't take long, and it completely did a reversal. What are you seeing, and is this going to be the kind of mode of action we're going to be in for a while?
Well, first, thanks for having me on. And I know you're a first responder, so thank you. I can't help but always think about that on September 11th. So, and other days.
Yeah,
you're right. The market, I sat here and I thought, how, obviously your goal is to look like you know something, right? To muddle through an interview and try to explain the market. And so I've done this for 45 years. The market changes. I recognize that you have to change with that or get run over. And so I'm trying to be a big boy and appreciate the fact that the participants in the market are much different than they were before 2015. That's when the pit closed, and the personality of our market, I believe, in a large way changed. And I got to think that there's some of that contributes to, is the main contributor to a day like today. I mean, we literally had almost a $5 trading range in the first 17 or 18 minutes on feeder cattle. I mean, come on. The old days, that didn't happen unless there was some real breaking news, right? Now it seems like the market travels so quickly through these gaps in the market. We used to be, when you had a pit, you'd call it gaps in the deck, where there was this room between where the buyers were and the sellers, and so I think that's certainly part of it, Susan. I gotta, I'm a little less bullish than I've been. You and I've been talking for years, but especially the last while, because some of this action is action that you also get when the market is maybe thinking about changing direction. Maybe you at a major bottom or a major high, those volatile trade like that. So funds, we should probably develop that thought a little bit more on what the funds have been doing the last couple of days too, Susan, if you got a second.
Absolutely. Let's head down that avenue.
Yeah, I should have helped prep that a little better. Okay, Goldman Sachs roll. Everybody, well, it's the Goldman roll, and people, what is that? Well, the Goldman Sachs is an index fund. It's one of a lot of funds. It doesn't represent all the funds by any means, but the Goldman Sachs roll, everybody knows when it happens. It's the 5th business day prior to delivery. So you can put it on the calendar. So this is day 4. But there are many, many other funds also. And the Goldman has to roll. They got a percentage that they're always long so many loads. These trend following funds have no rules like that. And so what I found interesting, that this week we've lost almost 30,000 open interest. Yesterday we kept some of it. The 2 days before that, we lost 10,000 both days, and they didn't replace it. In other words, the funds said, I'm going to take my money. Thanks for playing, and I'm going to step out for a minute, right? Now, I only bring that up because the funds, love them or hate them. We kind of, if you want a bull market anyway, you need them, right? So the fact that at least for now they seem to be stepping off the market just a little bit, I think, is also a little bit of an indication that we should be a little bit careful here, I believe.
But isn't that kind of just the nature of what we see in the trade as of late? I mean, you and I have had algorithm discussions many times before. I mean, you look at the funds, you look at the stock market, and the influence that those outsides weigh in on this cattle market.
For sure. Not to bore your listeners. I'd trade you today. This sitting there watching the market give me heartburn. I go sit outside on a nice September day and look at some good cattle.
I know. I mean, can you blame me?
Awesome. Good. So there's something called velocity logic. Okay, which there is a way to there is a way, if the exchange decides that they should, that you could slow down some of this order entry. In other words, one guy described it as, imagine this is a castle with a moat around it, that it gives the market a pause now and then. That system is in place. You don't see it, but it's gotten triggered a few times in the feeder cattle, especially, and that's the market is going through these price ladders faster than what's normal. So the market pauses for a couple seconds to let it catch up. I'm of the view that we could slow this down even a hair more, and that might actually help at least to curb this volatility a little bit. I think that the limits are way too big. I think that they cater to the funds, they cater to panic, right? Feeder cattle don't need to change $9.25 a day, in my opinion. So I don't know, things we can talk about, things that I do try to talk about with some of the muckety mucks, but I think it'd be okay if the market would slow up a little bit. What I worry is that it drives the hedger into the arms of the back. The hedger goes, I'm sick of this. I can't figure it out. I'm sorry to margin call that. I'll just give them away to the pack, or I'll do some contract deal with them. We need price discovery. And so that's the old guy bitching about it again, right? Sorry about that.
Well, I want to ask too. I mean, how long has it been since the South has been, I don't want to use the word better, but maybe a little bit stronger than what we've seen in the North?
Better. Wow.
I didn't use it, as I changed it.
Yeah, better at what? Huh? No, I get you. It's been a long time. What you're talking about, of course, is the fact that it looks like maybe as of today, we're going to officially go discount the South. The South is trading a few cattle at 240. And I can't get that here right now. It looks like it's going to be maybe more like a 238 deal, but the day's not over, and tomorrow is another day. But so what's happening, a couple of things here. You have a macro fundamental, and that is the borders closed. You've had 10 consecutive months of record low placements in Texas. Numbers are super tight in Texas. It can't be any other way, right? You shut down those placements for that long. That's just the way it is. So you hear this giant sucking sound coming from Texas, where cattle from Kansas are moving to Texas, cattle from Nebraska are moving to Kansas, et cetera, et cetera. And so even though the quality of the cattle in the North is much better, you got a freight constraint, right? In spite of the fact that we had been very, very current for a long time here in the North, and where we do price discovery, so we have leverage and price discovery. That's why I think, that's a big reason why we were premium. Now it feels to me like I don't think we're backlogged. I don't think we got a big, jump off a tall building problem here, but I don't think we're quite as current. And I think that's because of the cost of the feeder cattle. I think a few people might have sat back and said, I buy cattle that break at 250 or feed what I got for another month. Market's gone up every day for the last year. Why don't I just feed what I got for the month now? So it's something to pay attention to, something to keep our eyes on. So I don't think we're quite as current in the North, but this giant shortage of cattle in the South is what's generating that flip in the convergence of the cash. But usually bull markets are led by the North.
Do you think, Brad, the feed costs are going to stay in check like we've had? I mean, we've had amazing opportunities to this point.
Yeah, and perfect weather,
Yeah, that too.
Yeah. Well, I'm of the view, there's a grain report tomorrow, and I guess I'm not afraid to stick my neck out. I thought that the 188.8 yield was way over the skis of what was realistic, and I think that's what we're going to find out tomorrow too. The USDA is going to lower that average yield number on the corn. As somebody that uses corn like me, I'm taking action, whether it's call options or long futures. I mean, if you're going to buy these high priced cattle and try to get a cost of gain down there, I wouldn't be the first time that a big crop made a low in August, and that's what I thought happened this year as well. So there, I'll stick my neck out. We got a report tomorrow to get through with a little bit of risk on it, but I'd much rather buy corn than sell it down here. I think the worst is over.
So what is the best way for folks to get a hold of you?
I'm going to the fair. Oh, just kidding.
Okay.
Well, kkvtrading.com, but better call us 712-722-0023.
All All right, sounds good. That's been another edition of Cattle Chatter. Quick shout out to both Randy and Mindy. By the way, Randy is the best vet ever. He's our vet. Huge production sale coming up for them on March 21st. Wanted to throw that in because he was so gracious to let me do this program today with his cattle behind us. And that, folks, another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.